with Cathie Wood's flagship fund now down over 50% from its all-time high. The team at Ark Invest are going through one of the biggest crashes in their company's history. The problem is if there is still more downside to come, as the broader stock market is still only in correction territory, having dropped 12% at its lowest point this year. Now, they always say that great leaders are the ones that shine in times of adversity, and it's not how you are when everything's going right and well for you, but it's how you are and how you react when everything is going against you. So in this video, we'll be looking at the current big crash and why Cathie Wood believes there's been such a big downturn in the innovation sector, the current red-hot inflation and these interest rate hikes, and why Cathie Wood believes that it will soon all be reversing. And then we'll finish up with her monthly crypto update, and then some amazing things going on with Elon Musk, his company Starlink, and Russia. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so why has Cathie Wood's funds been hit harder than just about everything else? Well, she explains that it actually comes down to one unusual thing. Take a look.
For the past year, I feel like we've been going through a little bit of a different kind of shock, and it's associated with inflation and interest rate fears. Now, during shocks, and we saw this during COVID, what we tend to see in the public equity markets is what I call algorithms or quantitative trading strategies that just pick up on a few variables and press hard in terms of betting against them, the stocks associated with them. So during COVID, we could see very clearly that cash cushions and cash burn were the two primary variables that these algorithms seem to be seizing on. And they hurt our stocks disproportionately. In the span of 3 to 4 weeks, our stocks, many of them were down 75%. Because many of our companies are earlier stage, we're the closest you'll find to a venture capital fund in the public equity markets. And of course, at that time, we said, innovation solves problems, and we have a lot of problems now. And of course, our strategies took off once the coast was clear for the markets. Well, in the last year, this fear of inflation and interest rates moving up and destroying the valuations in the marketplace have gripped the markets. And it seems as though the algorithms were focused primarily on high valuation stocks. Now, in our strategies, we own what look like very high valuation stocks in the short term, if you're only looking at this year. But if you take a look at the multiples on our stocks, given a 5-year investment time horizon, you will find that they are at or below very mature innovation stocks. In other words, we've made that assumption. The valuations are going to compress dramatically and to the 18, 19 times range when it comes to enterprise value to EBITDA.
So interestingly, she believes there's an automated algorithm going on which only looks at a couple of basic metrics, which has then disproportionately affected the innovation sector. Now, on the surface, this does look a little bit like an excuse. However, I did recently cover Sam Bankman-Fried of FTX's latest insights, and he also mentioned the same thing. So probably there is something to it. Now, the next big challenge for the markets to digest is this red-hot inflation, which is probably going to lead to some rate hikes. However, Cathie Wood believes that inflation is not going to last, and for one main reason.
This week, Chairman Powell said, in all likelihood, the Fed would raise interest rates. He also did say, when asked the question in his testimony, that he would get aggressive if inflation seemed to be embedding into the system in a 70s-like scenario. We are not expecting that. Why? It comes back to this concept of velocity, the rate at which money turns over. So I did a little more homework on velocity in the 70s. Actually, the increase in velocity started in the 60s, and in the fourth quarter from the fourth quarter of 64 to the first quarter of 81, velocity increased 21%. So the rate at which money turns over in the economy. And what that meant at that time, at least, is many people used to buy, as soon as they got more income, they would buy goods and services, and especially goods, right away, as quickly as possible, because they were afraid prices would go up, or interest rates, in the case of cars and other durable goods, would go up. So buy now before prices and interest rates go up. And that became a self-fulfilling prophecy. If you look at what has happened since 1997, and I was actually surprised to see the peak in velocity this time around that long ago, from the third quarter of 97 to the fourth quarter of 2021, velocity has dropped 50%. On top of that, money growth rates have decelerated from the high at 27% in 2020 to 12.6%. That's the January reading. But if you look at money growth on an annualized basis, it is slowing down. It has slowed down in the last 3 months to the low single-digit range. So already we think there's a dramatic deceleration in money growth underway that many people are not focusing.
So, Cathie believes we will not be getting problematic sustained inflation like we got in the 70s, and this is due to money velocity. Now, it's a common belief that just printing loads of money leads to inflation. However, this isn't strictly true. You also need everybody spending the money, which is the velocity. So if the population begins saving and hoarding, then you can in fact print loads of money and not get inflation. And this is why Cathie believes we won't be getting runaway inflation. However, I think yes, but what happens if velocity picks up? Okay, and to finish up, we have Cathie's crypto update and some very weird things going on with Russia, Ukraine, and Elon Musk's Starlink satellites.
So the crypto networks are proving their worth as a neutral technology platform. We're seeing donations of both Bitcoin and Ether to the Ukraine. I think it's 50 million, if I'm not mistaken, in the last week. And we're also seeing Bitcoin as a currency hedge for Russian citizens who are watching the ruble get hammered here. And, you know, these are not the oligarchs. In fact, as we were discussing at our brainstorm today, there's not enough Bitcoin out there for the oligarchs to hedge, and they have been hedging for years anyway. This is for the average Russian citizen who actually is aghast, many of them, as we hear it, aghast at what's going on in Russia. We're seeing, of course, the social platforms providing real-time updates and providing, you know, a glimpse into the horrors that are taking place there. And I think that has put a lot of pressure on financial institutions and others to boycott or stop doing business with Russia. It's terrible for the Russian citizens who do not want this invasion, but I think we've never seen the financial system used as such a weapon, and we'll see if it works. We also know about Starlink. I think the president of Ukraine reached out to Elon Musk and say, hey, we're being cut off out there. And of course, Elon sent Starlink to the rescue. So that's phenomenal. That's phenomenal that we can continue to communicate with these people. And again, everyone around the world can see the horror that Ukraine is experiencing.
So amazingly, crypto has been coming to the rescue for the people of Ukraine who would have been cut off from the rest of the world, as Elon sent over his Starlink terminals after the request was put out by the Ukrainian president. But then, like something out of a James Bond movie, Russia has been signal blocking Elon's satellites. So much so that SpaceX are having to reprioritize fighting cyber defense against Russia, which could now delay his goal of colonizing Mars. It all feels like something out of a sci-fi movie. It even feels quite strange saying it. SpaceX is fighting cyber defense against Russia, which will delay the colonization of Mars. Cathie Wood and the Ark ETFs have officially crashed, as they're now down over 50% from their all-time highs. It's in times of struggle and uncertainty that great leaders come through. Great leaders emerge not when everything's going your way, but when everything's going against you. So the next couple of months are going to be very interesting. Now, whether it's the Ark ETFs or crypto, I'm in the camp that when something of value drops by over 50%, then you get a chance to buy the investment at a price that you wish you could have when everything was setting all-time highs. And it proves again that the principle of buy low, sell high is in fact quite hard to do. She believes one of the main causes as to why everything is so much out of whack is due to these automated trading strategies, which only look at a couple of basic metrics. Cathie also believes that inflation won't be sustained like it was in the 70s, as we don't have the same velocity as they had back then. And yet another great use case for crypto has opened up, as now over $50 million worth of donations have been made to the Ukraine in their time of need. And like something out of a James Bond movie, SpaceX and Elon Musk are now battling with signal jamming from Russia. It certainly is crazy times, and I hope this conflict can come to a speedy resolution. So, there you are guys, hope you enjoyed. Do you think this 50% crash in the Ark ETFs and also crypto is a signal to get out of the market or a rare buying opportunity? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.